We are live. It is a Friday, not a Thursday. You're not confused. Don't worry. It's the weekend. All right, it's about
Oh man, I'm
Um,
glad you pointed that out because I thought it was Tuesday,
so,
but it's
you know,
Friday.
in our line of business, some things, I mean, never change except for basically interest
Terrible
rates and
jokes.
that kind of stuff. But anywho, thank you guys for watching. This is your first time watching us. We try to give a short market update under 10 minutes, give some insight into the real San Diego real estate market, interest rates, all that kind of fun stuff. We have a clicker below going with active properties, pending properties. We break it down by 700 to 300 to 3 million. We have all that good stuff. And if you have any particular questions that are popping up, feel free to comment below. Love to give some insight onto your questions. All right, David, I'm going to pass it on. Let's talk about interest rates first. Let me share the screen.
Woo! Wow. Well, so it's Friday, and Vinnie pointed that out. So luckily we know that now. If you are under contract for a house, you should have locked this morning before the rate change in the middle of the day, because today was the best rates had been all week long. As Vinnie pulls up this chart right here, it's gone up, but this morning it was lower. But if you've been paying attention, it's like our rates they've still been staying around the 6.9 to 7.1 percentage rate. And this week we had things dip down to the 6.75, 6.875, even 6.6. You know, when you're quoting rates, we always got to add APR 0.125. But throughout this whole week, you had different areas of opportunity to lock in lower. And as you look at this, look at this Mortgage News Daily, which is a very credible site. These are off very, very competitive good lenders rates. And look at the VA, 6.37. That's almost 6.4. If you've been watching me and Vinnie and you look back, you were getting 5.75, 5.875 on VA a while ago, and that has totally been erased. The other thing with the jumbo has been weird. The jumbo has been a weird anomaly lately because it's been pricing almost the same as high balance with really good lenders. And this week, it's like my jumbo rate's ending at 6.75, which is 30 basis points lower than what's advertised here. And when you equate that to payment, it's a little over $300 a month. So, you know, if you're interested in saving that, that's always nice. And then their FHA, look at their FHA here, 6.35. That's also higher. But at the same time, it's gone up from where it was previously. So for those of you out there, we're mentioning all this, and the 30-year fix is averaging 6.92. I'm mentioning this simply because if your lender you're working with is not paying attention to, example, the housing starts this week that were released, they came in 5% lower. That means 5% less houses are being built. That is not what you want to hear. And housing completions fell by 6%, which means they're not coming to market. So if we're not doing as many building permits and we're slowing down bringing housing to market, what does that mean, Vinnie? Could you sum that up for me? Does that mean there's less houses on the market, but yet there's more listings coming up? But in the future, housing takes around 10 to 12 months to come to market. So if we're building less, that means in a year from now, we're going to have less houses on the market, even though more are coming on right now.
And mind you, that was the mindset. I mean, honestly, before COVID, we were talking about we need more inventory, we need more inventory, we need more inventory. The government wasn't allowing it. And then they started freeing up the ADU rules, making it really easy. Right now, it's really easy, ADUs, JDUs to add, right? But if we're not getting that new construction, what does that mean? Lower inventory. Demand's always going to be there in San Diego. I mean, I'm going to pull up right now to give kind of a.
And as you're pulling that up, Vinnie, the other thing that was very interesting this week, so the producer price index came in for inflation. It came in negative 0.5. It was expected to come in a positive 0.2, which means we basically had no inflation for the last report. When's the last time you heard us talk about that? That is basically, we haven't heard of that. So the reason why that is finally a little bit of good news is because the more the Fed feels that they have inflation under control, which, you know, personally with the whole tariffs, we didn't jump into that yet, but we can. Personally with the tariffs, that's uncertainty still. But the fact that inflation went down is huge for the Fed to maybe step back and start lowering rates, even though if you heard our show last week, we went over the Fed said 22 times they're going to be patient on lowering rates. But the options exchange now has them basically lowering rates before the end of the year at a 40% chance. So that's better than before. Doesn't mean rates are going to go down, but it does mean your lender should be watching the market because there is great opportunities where you can lock in and get a better deal than you could before.
So take a look at the active listings, and I mean, it's crazy to kind of think about it. I mean, so 12,000 properties for active and for detached and attached, 2019.
Wow, that's insane. But I remember that time, Vinnie, like prior to COVID, all the rates are around 5.875, 5.25. And we were like, wow, this was like really good market. Like the rates were good because that is
but we were, I mean, I remember too that we were like, we need more inventory.
Oh,
I mean, even at that time, we need more inventory. And like, so it's then we talk about COVID, all that kind of stuff happened. And we got down, I mean, to 1,800 properties all together. Look at the low point right there. And we're up to, and mind you, the 5,800 is different from what I have below. They take from a different source. The numbers are roughly about the same, right? But so yes, 56. They have it at 58, but it's around the ballpark. But we're kind of saying, oh my gosh, look at how much inventory we have. We have 5,800. We jumped from 45 to 5,800. We have so much inventory, right? But look at the full picture of everything, right? I mean, I think that's the thing you really have to factor in. Yes, we're getting more inventory. Yes, there's somewhat of a slowdown to the market because there's a lot of uncertainty happening on. But we still there's still enough demand out there.
I'm just looking this up. There's 3.2 million people in San Diego. That's how many people we have in San Diego. 3.27 million is what it's coming up as. So basically, we have a 2% housing supply. We have around 2%.
So, yeah,
that's not good.
I mean, it's just something to think about. Yes, the inventory is going up, but the demand is still there. Yeah, it's not as high as it probably would be if rates were closer to 5%. And we'll see. I mean, like David talked about, he projects just like, we've seen projections last year, right? We've talked projections of rates going down, and we've seen little dips, we've seen ebbs and flows to it. And it's hard to think we're going to have a big crash or anything like that.
No, I'm saying no, Vinny, and I'm still saying October, November, I think we have a rate cut.
Yeah, I mean, the thing is
we're going to get that for Christmas.
The crash is and we've talked about it before. The crash happened before because people had to sell. We had adjustables. I mean, people didn't have the ability to refinance their properties, right? There's so many different things that go into the lending process now to, more so protect than back then, right? So if you're waiting for that 2008, 2007 timeframe where you're just going to go, oh my gosh, I got a killer deal. I don't think
2008. You said 2008?
Yeah.
Oh, anyone that bought 2008, 9, 10, 11, 12 got the deal of the last 100 years.
But if people are waiting for that to happen again, where they're like, oh, we'll just wait, the market's going to crash because pricing is so high, that kind of stuff. It could slow down, and we've seen dips to the market, right? We've seen dips to the market. Like, I've shown you these dips to the market. You see these little dips, right? We have the ebbs and flows. We have the dip, it goes back up. We have the dip, it goes back up. We have the dip, it goes back. You're gonna see the dip, and then also too, we're looking at basically the macro of it. But there's micro deals out there, quote unquote deals out there. So based off what you're looking for,
we were just talking about one before the show, Vinny, and we're both baffled that happened.
Yeah,
that was a phenomenal deal. Whoever scored that deal, excellent job. But I wanted to just mention here, retail sales also this week was released, and it came in at 1% stronger than anticipated, which is kind of weird because everybody thought the tariffs were going to destroy everything. but I read an article in the Wall Street Journal by Walmart. Is Walmart has not increased their prices on over 10,000 items. They've kept the price exactly the same, and now the tariffs are frozen. So for you people out there who are hoping for a housing recession, which I'm one of them. I am, full disclosure. You're hoping for housing things to be better and lower rates. You actually want those tariffs to come back. You want the recession because that's the best time to buy a house because rates will be lower as long as you work with good people. Sorry to drag on.
All good. Enjoy your weekend, guys. Please reach out to David or myself if you have any sort of real estate questions. Just give us a chance. Give us a chance. See you guys.